this has been a weird year for savers and investors, and cash has been one of the top performers. So Mike Giordano, financial advisor with Williams Wealth Management, is here to talk about this. We like cash, of course, but let's talk about some cold, hard cash, Mike. Some say cash is king, others say cash is trash. So which is it?
I love saying cash is trash.
It's a good rhyme.
It's fun. I mean, you just envision somebody with their spoiled milk, like throwing dollar bills in the trash can, and then the dumpster divers. But the actual answer is it really depends, right? Cash is king in the short term. If you need money over the next 3, 4, 5, 6 months for any kind of goals, you want to have it in cash because cash provides that stability. But over the long term, cash badly lags inflation, even when we have normal inflation. Not even like today's inflation. It just so badly lags it that it's typically considered trash.
All right. Cash is trash,
yes,
says Mike. Okay, but how about from an investment perspective then? Cash has been good this year, so should we expect that to continue?
Yeah, outside of like energy, cash has been your best performing asset. It's lagged inflation, but it's done far better than stocks, far better than bonds, far better than real estate, all of these different asset classes. Typically, though, that doesn't happen multiple years in a row. So what everyone has recency bias. So you would love to, have had more cash at the beginning of this year, but going forward, you want to start working it into other assets because cash will probably lag.
All right, so what about advice for people who might be holding excess cash, but they're fearful of losing money or buying stocks or bonds given all the gloominess?
Yeah, so this is something that comes up all the time. When you have very volatile markets, everybody craves that stability. So they're holding on to as much cash as possible, and it has worked, right, over the first 9 months of the year. But going forward, you just want to start making incremental changes. So if you go, hey, I got enough cash needs here for the next couple of years, I can start building up, stocks and bonds. What you want to do is just work incrementally. So if cash is like driving it 3 or 4 miles an hour, work your way up to 15 or 20 miles an hour. Add a little bit of stocks, add some short-term treasury bonds, 6-month, 1-year treasury bonds, and get yourself there. And then once you're driving 20, you feel comfortable there, and then you can start going faster. So it's just kind of making incremental moves as opposed to feeling like you got to make a wholesale change.
All right, bit by bit.
Bit by bit. That's the way to live life, and it's the way to invest.
Very good advice. As always, Mike Giordano with Williams Wealth Management. Thank you so much for being here. Appreciate it. We'll be right back.